welcome to today's The Business BoardCast. I'm Nicky Larkin and I'm here today with Bethan. Hi, Bethan.
Hi Nikki, good to be here.
Fantastic. So Bethan is a business advisor at Goringe Accountants, and she has been, she's a trained auditor, and then over the last 18 months, probably 2 years, has been
Yeah, I
working
think
on
it has been.
various different due diligence and valuations, etc., and has been really working on a lot more M&A work. So today we're going to be talking about financial due diligence because Bethan's an expert in it because she's doing it all the time. And as I always say, financial due diligence is the audit, just like an audit, but the client actually wants it. Just a bit of housekeeping. Please do put your comments questions in the comments bar, or you can just say hello, etc. We're very happy to answer questions as we go along. So Bethan, what is financial due diligence? What on earth are we talking about?
Yeah, thanks, Nikki. So, well, financial due diligence, like you say, it's a bit like an audit, but it's a bit of a nicer process because the client actually wants you to work on this. So it's essentially we provide limited assurance on the viability of a business, whether that's a purchase or a sale, etc. There's multiple reasons. But it's a lot more bespoke than an audit. So it's completely catered to the risk appetite of the client and the nature of the transaction. So you can really have a bit of fun there and adapt it however you want to.
Absolutely, yes. Very important to agree the actual scope that the client wants you to work to. Absolutely. So when is it actually needed? Why would anybody need this?
Yeah, so I mean, it could be needed for a number of reasons, really. The top, I would say, would be if you're buying a business, so you want to make sure that what you're buying is actually what you're buying and there's nothing in there that you need to be worried about, or it's not going to bite you later on once you've made the purchase. You will obviously be involved in the due diligence when you're selling your business as well. So people will be coming to you and investigating your business, but then also you might want to have a sort of smaller due diligence beforehand, just as a preliminary task, basically, to make sure that you've got everything in line ready for that due diligence. And then also you can just use it for sort of a general business health check and to make sure that you're compliant in all your areas. Just to make sure your processes are in place and all recorded correctly.
Yeah, that's a really good point because people often think about it for M&A purposes, but you're absolutely right. We've done several of those over the last few years where the client has got big aspirations for growth and so wants to do a due diligence outside of their normal audit process, and has been a very, very useful exercise for them.
Yeah, and I think a lot of business owners, they get caught up doing all of their day-to-day stuff that they have so much to do day to day that you don't really have enough time to sit back and look and just go through what you've actually got in your records and to make sure that everything is aligned and how it should be. So it's good to do that every now and then, just as a side.
Absolutely. So if you're going through what is actually reviewed, what things are we talking about regarding, because there is, different due diligences, financial due diligence, commercial due diligence, and legal. We're generally talking about the financial and with a bit of commercial usually. So what sort of things are we looking at?
Yeah, so I think it's really good to have a mix between the financial due diligence and the commercial, because that does affect your finances as well. So it's one thing just to look at all of the P&L, the balance sheet, the statutory accounts, etc. But you've got to look at the stuff on the outside around it as well. I don't know, the staff and the contracts that you have in place and that sort of commercial aspect to it, so that you're more confident on the financial as well at the same time. So kind of like the main areas that we would look at would be revenue. So we would look at the stability of the revenue, whether customers come back, whether there's recurring revenues from those customers, and also whether you're dependent of certain customers, because you don't want to buy a business and then find out that 70% of your revenue comes from one customer and then they leave because their ownership has changed and they don't like it. But that would be awful. So you need to make sure that you haven't got customer dependencies. And if you do, are there contracts in place to keep them so that they can't just get up and leave and they have to give a certain period of notice, so then you have time to find a replacement. So revenue is very important. And we also look at forecasted revenue as well. What's in their pipeline? What revenue can they bring into the future? Because it's no good just looking at the historics. Those customers might not come back. So you need to know that you've got things coming up as well. So the next, oh, sorry, were you going to say
Can I
something?
just add in a quick bit? You're absolutely right on that. And a very important thing, which a lot of people are always thinking is the history, but you're absolutely right. Is the future is just important as well. So we do spend a lot of time on verifying forecasts and stress testing the business plans and budgets, etc. Because those are, it's really important to think, like, okay, well, yes, they've got this budget, but what actually would happen if, in the stress test, 20% of the revenue disappeared, for example. So it's important to do that sort of stress test work in due diligence to be clear of what you're actually buying.
Yeah, and that's definitely a huge focus of our due diligences that we do. The commercial side is really important, and the planning. So then, the other kind of big area would be cash. Cash is king, everyone knows. So we have to make sure that there are sufficient cash reserves in the business. Are they, we need to check their bank statements. Do they actually have the bank balance that they're saying that they have? Because a lot of the price, if you were buying a business, a lot of the time the price adds on the cash element, or it is definitely factored by the cash. So you need to make sure that that is accurate. We also look at how they use their cash and how they manage it. Is it just burnt through straight away, or can they maintain some of it on the side and put some savings away? That's really important to know. And then we also look at the working capital, which kind of comes into the cash burning element. So how much cash does that business require to run, just generally, and whether that's going to work with the new owners. So those are all sort of really important areas of cash that we look at. And then I would say the other sort of key element is your staff, because you're taking on a big force of staff potentially, and you need to know, what do their contracts say? What is their termination policy if you're going to make any changes? Can they resign because they're not happy with the new owners? What sort of obligations that you've made? So I don't know, do they have extra benefits that aren't necessarily on?
Extra bonuses that that they're expecting.
And that could catch you out. So we need to check those elements.
Absolutely. And they and also, because if we're working for the buyer, the buyer may have be wanting to, in their merger plan, say, well, I want to take that on, but actually there will be certain roles that potentially may be subject to redundancy. So it's calculating what that cost would be as well. So it's looking at, how long people have been working there and things like that. Obviously, that's not such a fun part of it, because it's always depressing that bit. But
it is important to know.
It's very important to know. Absolutely.
Yeah.
Joanna's made a really good comment and question. She's saying, hi, Bethan and Nicky, how often would you recommend a business do voluntary due diligence? That's a really interesting question.
Yeah, I mean, it really depends on how big and complicated your business is, I suppose, and how much you want to be sure on your processes. But I would say at least annually, and if not on a larger scale, maybe once every few years, but at least an overview annually.
Yeah, because remember, some of these things, if it's for, for internal due, larger companies, they will have internal auditors. So they will be doing a lot of this kind of work. If you were in a corporate, you would actually have a whole team that would be constantly doing this sort of due diligence work. Whereas sort of the medium size and the small businesses, I would say on the small businesses, they probably, if they're just sort of stagnant, might only actually be worthwhile doing sort of every 5 years or so, or perhaps when you've got change in staff, or if there is some other big step change. So I think it's very important, if you are going for the next level in growth, is really important. And that's often when we are commissioned to do for internal due diligence, because they're wanting to look at, okay, this is great, we're doing really great when we're a £5 million business, but actually what's going to happen if we do scale up and we want to be a £10 million business? And our processes and our systems and our basic numbers, is it going to stretch to that part? Because that's another element of it, is the process and technology due diligence. Now, obviously, as business advisors, we can do a certain element of that, but in some instances, when it's larger business, we'd bring in experts for the IT section part. But yeah, absolutely. But great question. Thank you, Jo.
Yeah, thanks, Jo.
So where were we? So we've covered when is it needed, and we've covered what's reviewed. Is there anything else that we need to cover in the what is reviewed? So we've been through. I think we've been through most of the areas.
Yeah, I think the one final one that I just want to mention, because it is really important as well, is leases and obligations that you have as well as a business. So if you've got a loan outstanding or a hire purchase agreement, etc., you need to know what the terms are on that contract when the ownership changes. Do they have to pay some kind of fee to change the ownership? Can the contract still be viable, or does it end or terminate? But those are really important things to consider when you're planning, when you're buying a business.
Absolutely. And if it is a business that's not being audited at the moment, some of those things may not have even been looked at or considered, or people be aware of them. They might not even be thinking about the fact, okay, yes, my lease is terminated in 2026, but actually I'm responsible for reparations to the, repairing everything, and they've got, so potentially a huge cost at that point. So, and also with the smaller business, you've got to be super careful when we're looking through stuff, because often there might be some off balance sheet type of things. So, we can't always smell everything out, but we can spot certain trends and patterns, and can sniff out certain things that may not actually be in the accounts, that is important to be aware of. I think we may have another question come in. Okay, let's before we go to the seller tips section, we've got another question for you, Bethan. So well done, Bethan. Really interesting. For thumbs up from Tim. Can people-related issues cause major problems in a due diligence process, and what may they be?
Well, if we mean people-related issues, as in staff, I'm assuming.
Yeah, I mean, they could come. So I'm assuming it could be, if you've got a known grievance happening at the moment, you've got to be able to be prepared that could be potential costs.
Yeah, absolutely. Because you need to know. So when you're buying a business, you're probably forecasting in a way, or planning what your expenses are going to be. And if there is some kind of grievance in the staff going on at the moment, then you need to know what the legal costs are going to be, and you need to plan that into the cash. And potentially when you come to the negotiations of the pricing, and when you're buying it, you can obviously whittle down the price a bit to try and account, to account for that, because it is going to come out of your cash at the end of the day. So yeah, it's really important to make sure.
and it definitely is very tricky sometimes with SMEs as well, because a lot of SMEs won't have an HR advisor or an HR department. So, sometimes obviously in the legal due diligence, you are supposed to legally declare if there are known grievances, etc. But it's difficult sometimes to know if there are things bubbling under the surface, because typically in a sales situation, the staff aren't aware of the purchase, so you can't go and interview the staff and find out things. So you need to look for signs. I mean, signs of if you're not getting good client reviews, or
That's
looking at Glassdoor or something and seeing there's some suspended things, or looking at exit interview notes and things like that. They can tell a whole story in themselves sometimes.
Yeah, absolutely. And like you say, for SMEs, it is quite challenging. So you need to do that extra digging, because they might not know that it's a legal or grievance or anything like that. So yeah, really good. Yeah, good tips, Nicky.
Okay, so speaking of tips, we're on to seller tips. So what's seller tips? So if you're selling your business and you want to make sure your due diligence is top notch, so nobody chips away at the price, what are your top tips?
Yeah, so as a seller, you want to sell your business as quick well, in a good way, obviously, but as fast as you can, because it just costs you more money and holds off you leaving if you've got a fun retirement, or another project that you want to invest in, etc. So in order to make the due diligence process as efficient and as quick as possible, it would be good to have organized records, have all of your records in one place already. And you can find online a lot of example due diligence request lists and things like that. So you can get a head start on that already before they even approach you. The other idea is that you could get a preliminary due diligence, as we said before. This could be sort of a light touch, but just to make sure that you know that your records are well kept and that you have the information that is going to be requested. And then second to that, you need to make sure that you review everything before you send it out. Because if there's any kind of mistake in there or something, then obviously when the due diligence team on the buy side receive it, they'll have so many questions. It might make them a little bit more hesitant about the purchase. So it's really important that you double check everything and that you're happy with all of the records that you've got before you send them over. And that's what the preliminary due diligence can help with as well at the same time.
Absolutely. It's good to be proactive with it. So if you are aware that there are differences between your management accounts and your statutory accounts, rather than just send them across a gap analysis between them as well, so that the other side, because honestly we're in a lot of brownie points if you send that across and the people doing the due diligence see that, because it will be a big thing that they won't have to worry about, and it'll be much quicker signed off, and also probably they'll look at it less as well if they've got a gap analysis.
Yeah, I would certainly welcome any reconciliations like that when I'm doing the due diligence. Because like you say, otherwise you're going back and asking them, what's that difference? And it just adds more time. So if you've got it already, then that's brilliant. It just saves everyone's time. The other sort of tip, the final one I want to say for the seller, is that don't save up the list. So when they send lots of requests, don't wait to do it all in one go. I know that seems like it seems like a good option, but don't, because if you can send bits that you have access to then and there, then that's always better, because they can get started on different aspects of it in the meantime.
Absolutely, because I completely agree. Because usually the due diligence is done after heads of terms are signed. There may have been like a light touch one done beforehand, but the really deep done. And you want to get the financial diligence signed off before they really get into finalising the SPA, etc. So you don't want to delay it at all, because where you think, oh yes, we've got ages because we agreed that we're going to do the completion date in 2 or 3 months time. that clock can quickly go round. So
and depending on how detailed you want your due diligence, it could take that whole time if you want it to. There's always things to look for. So that's
I mean, because time frame, it's we'd prefer to be able to do due diligence in a comfortable 4-week time frame. When there's been emergency ones, we do 2 weeks. But when you've got unorganized sellers, sometimes it takes 2, 3, 4, 5 months because they can't get their act together.
And that's where getting your files organized beforehand really comes in handy.
Absolutely. So buyer tips.
Yes, so the buyer. So obviously the buyer is usually the client for the financial due diligences that we do. So the real key thing I would say is to agree the expectations and their risk appetite early on. Because like we said just now, the due diligence can take as long as you like. We can go into as much detail as you like. And that's the key thing to establish at the beginning, is how much detail do you actually require? How much risk are you willing to take, so that we know exactly what's expected, and then also it keeps the price controlled too.
Yeah, absolutely. And you may have people in house that can do it for you if you're doing lots of different acquisitions, but it does pay using people that are experienced in it. So if you have got multiple, then great. Otherwise, some accountants will have experience, but a lot won't have any experience in doing this kind of work. So it is worthwhile, because if you're doing it all the time, you're used to spotting out these various different trends and things. There are also, just so you're aware, I just thought to point out that, because we know that we've got a client that does have buyer due diligence software now, which is really useful. Now, just to bear in mind, that can really decrease your costs of this and can make the whole process much quicker, which is fantastic. I'm trying to remember the name of the software.
Recce,
that's it, Recce, which is fantastic. But essentially what it's doing, you still will need the human eye on it too. But essentially what it should do, I think they generally say that, it should reduce your whole process by about 2 weeks or so. So that, which is great, because then it saves you some money and save time, which is great. And it's, it's especially if you're looking at huge volumes of data, it's really, really useful.
Yeah, absolutely. And there's lots of solutions like that coming up now with everyone's so excited about AI. So I think the due diligence, a little bit
biased from Recce, because
of course.
And it is good. We have seen it. It doesn't work well. But yes, there are other options out there. Are we on to top tips now, Bethan?
Just one more buyer tip, if that's right. Okay. I was just going to say, it's really important to keep in the loop as well, and just make sure that you're acting on all of the concerns that we might propose to you as they come up, so that we can nail them in the bud straight away, decide if it's a deal breaker or not, and not waste any more time. That's basically, I would say those are the main buyer tips.
Fantastic. So what we're just going to do now is, if you've got any more questions, we'd love to answer them. But we are going to just go through the top 3 tips while if anyone thinks of any more questions for us. So Bethan, what are your top 3 tips?
I'd say number 1 is definitely keeping good records and having your records ready. Number 2, plan ahead. Make sure that you're ready for this due diligence, because it is a big process and it needs to be treated as such. So plan ahead and think about that. And then the third one would be to double check everything before you send it.
Absolutely. Brilliant.
Don't create unnecessary questions.
Absolutely, because you really don't want to find that you're failing on your financial due diligence, and that ends up messing up your sale and it doesn't happen. That, you know,
Yeah.
And sometimes it is just it's due to buyer confidence. You know, so you need to be organized, you need to have good records,
make them feel confident.
Absolutely, because you know there is a human factor in purchasing a business. They've got to have confidence in what they're buying, and so you really do need to make sure that confidence is maintained, and in all areas. Super, that's super.
Absolutely.
Thank you so much, Bethan. That was your
Thank you for having
debut. No, you're amazing. We will welcome you back again later in the year. I'm sure perhaps we'll talk valuations or something later in the year. I've just thought of a good one to add in for later in the year on valuations. So yeah, we'll get you
know.
I think the next one I believe is a succession planning focused one. We've got Nick Phillips talking to us about marketing your business for exit. So very useful to be hearing about, you know, again, it's about helping you be able to sell your business, get the best deal for it. So how we actually present it and market it in the different marketing channels, etc. So he'll be opening our eyes on that. And then I think the next one we'll probably be doing is something bit somber, but on wills and probate. We go a bit technical, but that's very relevant for business owners because you want to make sure that you do have a business will essentially. So yes, all good. Thank you so much. And Bethan, anyone that wants to get in touch with you can touch on LinkedIn.
Yeah, absolutely.
So Bethan,
I'll add a comment so that you can see.
Yeah, so yeah, add a comment on there so that you can link in on LinkedIn if you're watching on LinkedIn. If you're on YouTube, just hop over to LinkedIn and find Bethan Alsey, business advisor at Goringe Accountants. So thank you so much visiting the business board. I hope everybody has a lovely weekend. I hope that all those accountants and tax advisors out there are nearly at the end of their tax filing and can have a lovely restful weekend. But thank you so much, everybody. Cheerio.
Thanks. Bye.